Okay, here we are. Good afternoon and welcome to our second BörsenTalk Mittag in 22. My name is Andrea Buck, member of the Executive Board of SIX Swiss Exchange. It's my great pleasure to welcome the Swiss and international investor community to this webinar. Today's focus is on the ETF market. The increased volatility in the first quarter of 22 turned out to be a very different story than any of us could have imagined. The high inflation rates across the globe, the corresponding adjustment of interest rates, and the Ukrainian war have led to massive trading and adjustments of portfolios. These facts are also having a profound impact on ETFs, which our panel of experts will discuss today. But before we start, I would like to inform you about some housekeeping. If you have been part of our first webinar in February, then you know already that we use Slido to capture your questions. So please take your smartphone and go to slido.com and put in BörsenTalk 22. So BO Talk, that's TALK 22. And we have prepared a slide which shows you the appreciation and the Slido connection. I prepared the poll just to see that we're all on the same page, and let's start with this one. So the question is, where are you following BörsenTalk am Mittag from? So are you in the office, are you at home, or anywhere else? So obviously, that's just to make sure you know the Slido tool, and obviously we will have more questions and polls throughout the webinar, so to get the feeling of certain aspects of ETF investing to the benefit of you, so the panel can discuss them. So let me see where you are. So we look at the results. So it looks like most of you are in the office with at the moment 58% or either at home. So it's kind of a 50-50 race. Excellent. So I see you understand Slido, you know the code. So with that, we can carry on with it. So if you have any questions during the course of the webinar, please use the Q&A area and type in your questions in Slido. The panel will answer some of these questions during the course of the webinar. Furthermore, it's important this webinar is being recorded and will be distributed to all of you in the coming days for your convenience and to rewatch crucial parts of it or even all of the webinar. So enough of palaver from my side. Let's start with this ETF webinar. Will the volatile markets give active funds an advantage over passive products? Please, Debbie, the stage is yours.
Great. Thank you for inviting me to moderate this panel. It's exciting to be here. You know, to give you some perspective, the ETF industry just turned 32 years old. So the first ETF was listed in Canada. Many people don't realize that on March 9th, 1990. And the ETF industry had a great year, ended last year with $10.3 trillion and $1.3 trillion of net inflows. In this webinar, we're going to be diving into what's been going on in Europe, and we have three experts who are joining us today. So I'm going to ask each of them to briefly introduce themselves in case you don't know them already. And I would like to call up first Andreas. Could you say hello and introduce yourself?
Yes, thank you very much for the invitation to the SX team and to you, Debbie. It's a pleasure to be here. My name is Andreas Zink. I'm the head of Vanguard for Switzerland and Liechtenstein. When you mentioned ETFs already existing 32 years, I realized I'm not as long in the ETF industry as you are, Debbie, because you are probably the person that is the longest in this industry and the most experienced one. But I'm already 15 years in this ETF industry, so I realized I'm probably getting a bit old. So I'm really a big fan of ETFs, and I have seen them kind of growing, and I think it's a fantastic instrument, in particular for the retail investors. So it's great to be here and to discuss this great instrument.
And Arno, can you join us and say hello?
Hello, Debbie. Hello, everyone. I'm very glad as well to be there. I'm Arnaud Linas. I'm in charge of ETF indexing and smart beta for Amundi. I've joined Amundi recently from Lyxor. Effectively, Amundi acquired Lyxor end of last year, and now as a joint business, I'm representing the ETF business line of Amundi today. I'm very glad to be there, and effectively, you're right, Debbie. It's been a while. ETF are there, but in Europe, we started later, 10 years after, back in 2000. But I'm sure we will be able to show the differences and especially innovation that Europe brought on the table in that industry. Back to you, Debbie.
Thank you. And Olivier, last but not least.
Hi, Debbie. Thanks for having me today. Great to be here as well. I think with Andreas and Arnaud, we've had quite a few years of ETF expertise from all of us across many providers. On my side, I'm Olivier Paquier. I head the ETF distribution team for JP Morgan Asset Management in Europe. A real pleasure to be here. I'm one of those 46% of the people in this webinar who's working from home today. So please bear with me in case the connection disrupts. We have started at JP Morgan the ETF adventure in 2017. So probably not 10 years ago, but more recently. And as we usually say, we came with a few interesting ideas. The idea for us was to bring to the table innovative ETFs in the active space using the intellectual property of JP Morgan, as well as our investment research capabilities. So quite something different in the ETF market, I believe.
Great. So Andreas, why don't we start with you and we can discuss what you see as some of the highlights from 2021 in terms of the ETF industry in Europe.
I mean, the year itself or the ETF flow itself is really the star. I think we have seen record high inflows. I checked the numbers on different sources. I found that incredible figure of $190 billion inflows in 2021. When you look at the kind of 5 previous years and take the average, the 190 million is almost 3 times as high. So it's an incredible year. And it seems like we are catching up on the US. I mean, it's still a big difference to our colleagues in the US, where the ETF market is much bigger. But we are catching up. 2021 has been an equity year. I don't think there is less interest in fixed income ETFs. It just has not been a fixed income year. It has been a difficult year for fixed income, and that's reflected in the flows. So almost 3/4 of the cash flows went into equity ETFs in 2021. I think the trend to highlight is certainly that almost half of these equity ETF inflows went into ESG strategies. So that's it. I wouldn't call it a new trend, but 2021 has certainly been the year where this trend has really accelerated a lot. And I have never seen such a dominating trend in the ETF industry. We have talked about fixed income ETFs maybe 5-10 years ago, but they never became as dominant as the ESG trend we have seen. So in total, I mean, the ETF itself, this 190 billion, that's the highlight to highlight. And then within kind of the different categories, certainly the sustainability ETFs or the ESG ETFs that are the other highlight, the other trend to highlight.
Yeah, and maybe just talking a little bit about retail, because I don't think most people realize that, you know, ETFs are a democratic investment product where you see pension funds, hedge funds, financial advisors, but you mentioned retail investors are using them. Can you talk a little bit about that?
Yeah, so one of the reasons why I'm a big fan of ETFs is what you just mentioned. It's the most democratic investment instrument. Everybody has the same price, independent how much you trade, how much you own. Everybody contributes to the same pool of liquidity. So hundreds or thousands of small investors contribute to the same pool of liquidity as a big institutional investor probably moves a few hundred million. So that's really fantastic. And all investors benefit from that contribution to this liquidity pool. So far, I think the European market has been an institutional market. So I think it's not a secret that the main users of ETFs in Europe are banks, asset managers. The insurance companies then came in a bit later, so the traditional institutional investors like insurance companies and pension funds. And now we really see a strong trend in retail. It's not as pronounced as in the US, where I would say probably half of the flow comes from retail investors, but it's growing. And it's always difficult to get data, hard data. So what's the share of retail investors in Europe? What I can say is Vanguard is one of the few asset managers that is in the direct-to-consumer business. We have worldwide 30 million clients, private clients that invest directly with us. In Europe, it's a bit less because the majority is in the US. We have direct-to-consumer businesses in the UK and in Germany. And from the flows we see, we can say about 25, 30% of the cash flows goes into ETFs. That's probably not a good indicator for the market because Vanguard clients behave a bit special, right? They stay the course, they have a long-term strategy. And Vanguard investors like funds, index funds in particular, but nevertheless, we have this 20, 25, 30% share of retail investors. The other highlight or the other fact I would like to mention, Germany, for example, is probably the biggest or second biggest market of self-directed investors. We see the well-known ETF savings plan or Sparplan in German, where every year between 15 and 20 billion dollars comes from self-directed investors and all goes into ETFs. So that's another trend. Other markets in Europe are a bit behind. I would also include Switzerland. I'm based in Switzerland, is a bit behind that. But I'm absolutely sure that this trend will come to every market because it's just a fantastic instrument and it gives every investor a really good chance for investment success.
That's great. So we're going to turn to one of the polls and then we'll go to Olivier. So maybe we're not turning to the poll. We'll go to Olivier. So Olivier, maybe you can tell us how were the flows for active ETFs?
Sure. Maybe as I was planning on commenting on maybe on the result of the poll, if it had worked, one of the largest ETF custodians on earth called BBH has just conducted a global ETF survey towards institutional investors. So it does not include, to Andreas' points, retail and digital platforms. But an interesting number that I'd like to share with the audience today is that over 78% of investors surveyed who already are using ETFs were planning this year to increase their ETF usage in the active space. So with actively managed ETFs, which I find it quite interesting. It's not the only trend for sure. There's plenty of other trends. This is why this market is also very interesting. But I think this is striking to see that on the active space, active ETFs represent only 3% of the flows of the overall active of the overall ETFs. But the trend is picking up. There's a clear continuation and, in my view, an acceleration of that trend. A few years behind the US market, where in the US, active ETFs represent 3% of the assets under management. So the money actually managed by ETF providers. And 12%, they account 12% of the flows last year. So a record year as well for actively managed ETFs. It's been the case as well in Europe, an active year with over $5.5 billion roughly gathered in actively managed ETFs, 13 providers existing in the active space launching ETFs, accounting for around $20 billion of clients' money invested into active ETFs. Another, not to bore everybody with only numbers, but I think there's an interesting number to share, is that outside of the market cap weighted ETFs, so if you look at ESG, smart beta, actively managed ETFs, thematic ETFs offering something different than the pure market cap, it's 25% of the market in size. So it's not unnoticed in my view. And over a 1 year period, it's over 66% of the flows. So we see that we were talking about a shift probably in the ETF usage with investors, probably a clear increase with the retail portion of the spectrum, I would say, but also there's a clear difference in the usage of ETFs. And I'm looking as I'm talking at the responses that the poll is pulling together. So there's clear opinion about the long-term views, US trends that will conquer Europe. I love the vocabulary. I love this poll. And and ETFs can respond rapidly to changing market conditions.
Yeah,
interesting numbers.
Yes, it is. I mean, maybe we should just clarify when we talk about active, what do we really mean in terms of actively managed? Because many people think that ETFs are really just index-based products. So maybe you could help us understand when you think of active, what is that?
Right. I would say maybe there's a couple of angles that you can choose to look at with ETFs. You can combine them if you will. So any type of investment decision beyond a pure market cap weighted type of index could be considered an active decision. Let me just take an example. If you decide to invest into a certain style or bias, or if you decide to invest into certain categories, this could be an active decision. ESG could be an active decision. That's the first way of looking at ETFs. The beauty of the engine itself is that you can invest in much more than simply an index. That could be your choice. You can also look at, as long as transparency is respected, diversification is respected, usage rules for sure, you can look at pretty much any investment type that any ETF manager is willing to put within the ETF engine. So you can look at a fundamental approach, typically stock picking based on active selection and investment research, or you can look at something more systematic such as smart beta. Smart beta can also be considered active in, I would say, a systematic way. So there's various ways to look at this. There's no one-size-fits-all answer, but I would say that as long as you decide to get out of a simple index, you're making an active decision.
Okay, perfect. And Arnaud, so let's turn to Q1 2022. We saw that the ETF industry in Europe actually had record inflows in January of $29 billion US. So where has the money been going this year?
Sure, Debbie. Effectively, January was, like Andreas mentioned, a very nice month in the same trend than 2021. Unfortunately, due to the crisis in Ukraine, we are observing a regime change quite significantly in February and March. We can see three thematics that are coming at the front right now. Flight to quality is first, with a lot of inflows into gold, into bonds, into govies, US govies, European govies. The second trend we can observe is sector rotation, and people switching from the play that has taken place last year in value tech to defensive, to oil and gas. Unfortunately, I will come back later on this, to financials in the context of interest rates increasing. And the third trend, which is not a good news actually, is less ESG than last year. If we come back to last year, more than 50% of flows last year went into ESG indices. So that's a revolution. That's massive. What we observe in Q1, especially in February and March, due to the crisis, is probably a loss of momentum, a loss of focus. I mean, portfolio managers or clients are trying to protect their portfolio, are flying to quality, are going into gold, and are maybe less concerned right now by the shift they have to do in the long term to ESG and climate indices. We do think at Amundi that it is temporary, that is relative to the crisis. But in the long run, we do believe that ESG and climate indices will come back to last year a rate of capture of flows, meaning a significant proportion of flows will come into those indices. But we are in the middle of this crisis. That's not a good news for ESG. That's not a good news for planet, basically, to see those flows into oil and gas. Worth mentioning, however, that we are seeing a lot of flows into new energy ETFs that potentially could finance, solution and our dependence to oil and gas. That's a good news, and we hope that these trends will continue, thanks to our capacity as well to propose innovation in that field. So all in all, Debbie, quite a change recently. I would say that the market trend that we were observing last year, which was really regular inflow every month, significant, has been a bit shaken recently, and obviously we can understand why.
Yeah, our thoughts go out to the people in the Ukraine. So the next poll is going to go up in the background, and we'll just carry on talking, so you can answer the poll as we're talking. So, Andreas, one of the interesting trends we have seen overall, when we think about the ETF industry, 70% of the $10.3 trillion invested is sitting in US domiciled ETFs. When we look at ESG products, 60% of the assets are sitting in European domicile products. So clearly, as we just heard from Arno, the trend towards ESG is being driven out of Europe, and I do believe also that it will continue. What are your thoughts on the move to ESG, Andreas?
That's funny when you mentioned that the trend is a European trend. I can absolutely confirm that, and we have internally at Vanguard, we have lots of debate about ESG strategies. It's absolutely a fact that the ESG flows in the first quarter 2022 have decreased. I fully agree with Arno. It's not a structural change. I think it will continue, like it will come back. However, what I think investors have realized that some of those strategies are fairly concentrated. So we have seen last year a clear trend towards these positively screened products, following MSCI benchmarks mainly, and some of those benchmarks are extremely concentrated. And when I say that, of a universe of, let's say, 1,500 stocks, 1,200 stocks are filtered out, and it's not surprising that the volatility or the diversification benefit you have from an ETF can change, and that has happened now in the crisis. So I think a lot of investors have realized that what they bought, right? So I think investors need to think more about which ESG approach they want to go for. And I think we have also learned it that investors are not willing to give up on the investment outcome when they invest in ESG strategy. So it seems for a lot of investors, the investment outcome is still the main target or a top priority. And so I think the industry needs to deliver ESG solutions with good investment outcomes. And I think here what I would like to mention is that the investment stewardship program so far is the only ESG approach in the industry that has been scientifically proven to have an impact. So all these ESG products that invest in a subset and try to change the world with the capital allocation argument, so far it has not worked. And there are multiple studies that confirm that. So this needs, I'm not saying it's the same in the future, but so far the capital allocation argument has not worked. What has worked, and all the asset managers and wealth managers are doing that, is investment stewardship, so talking to the portfolio companies and trying to make a change, right? So that's very important. When we look at the product side, I think investment stewardship is really the standard for ESG, non-ESG products. So when you buy a standard product, it doesn't mean that there are no ESG criteria considered. That's wrong. The industry considers ESG criteria also in standard products. But when we focus on what's classified as Article 8 and Article 9, I think we have three strategies, the exclusionary strategies. So companies are filtered out because of their activities. Examples include weapons, examples include fossil fuel, nuclear power, things like that. So companies are filtered out of the universe based on their activities. The second approach is the positive screening. So that's typically based on ESG ratings. So the companies with the best ESG ratings are selected. Here you have very concentrated and you have more broadly diversified strategies. So that's the positively screened or best in class products. And then last but not least, you have what we call climate products. And here the EU has defined some taxonomy, some definitions, and we can define between climate transition benchmarks, so-called CTBs, and the Paris-aligned benchmarks. And those benchmarks, they consider if companies have some carbon or some emission reduction targets, and there is a certain trajectories that those companies need to follow. So for example, a climate transition benchmark needs to have a 30% lower emission footprint and needs to have a 7% reduction trajectory over the coming years. So these strategies, I think, are very different from the exclusionary and the positively or the best-in-class products, which are ratings-based. So other criteria, I would say more objective criteria are considered, whereas with the ESG ratings, there is a lot of assessment of the firms, some self-reporting, there's a lot of assessment of the rating provider is embedded in that. And I think when you speak to ESG experts, the main criticism about the positively screened products is really that the ESG ratings have not been created to be the only decision factor if a stock gets into the portfolio or not. So from a Vanguard perspective, we believe in investment stewardship, we believe in exclusionary strategies, and we believe in climate strategies, whereas we are critical on the positively screened concentrated products that are out in the market.
That's great. So we're going to turn to talking about how has the ETF ecosystem adapted to look at active and ESG products. But the polls should be up, and it's looking at how well ETFs have been able to address liquidity. So as we have Olivier talking about the adoption of the industry, we'll watch the returns and then maybe he can comment them like he did the last time. So over to you, please.
Great, thank you, Debbie. So the one good thing about the ETF industry, if I start with the ETF ecosystem and the way it's been handling the changes, and sometimes quite rapidly, is that this market has managed to adapt to market conditions and to the innovations overall. I recall back in 2005 when I think I saw the very first smart beta ETF at the time in Europe, and it has to be around that date. The question was, how is the ecosystem going to adapt? Ecosystem meaning the ability for all the players around the ETF itself to make it available in an efficient way for clients and for investors. In a cost-efficient way, in a transparent way, in a liquid way. In the end, regulation and market participants actually align quite nicely. Same thing for ESG 5 to 6 years ago. Same thing for actively managed ETFs more recently. The reality is that the market is adapting. I was talking to one of our market makers yesterday to give this audience maybe a concrete example. And before we launched actively managed ETFs, for example, at JP Morgan, we wondered if the trading costs would be higher for clients, one of the key questions. And I'm talking about the entry and the exit cost within the ETF. Clearly, the answer was they were exactly the same as the market cap weighted ETFs, because the regulation imposes rightfully that ETFs be transparent. We do send to our market makers every single morning the perfect composition of every single ETF, whether active or passive, and they have the time to hedge their position and find the right liquidity for our clients. So the job is slightly different. It requires some adaptation, but I would say the ultimate word is that it's pretty much the same in terms of adaptation over time. Looking at the polls, as we said that I would probably comment on this, I find the answers quite reassuring. 75% of the respondents today said that they're confident in ETFs providing additional liquidity during volatile markets. Maybe I could comment with a couple of things on this. The first is that in volatile markets, ETFs guarantee a price discovery to end clients, which I think is something quite nice, especially in harder to apprehend, not necessarily price, but apprehend markets. I'm thinking of the fixed income markets, emerging markets with various time zones. This can be quite difficult for any type of investor to apprehend, not just professionals. So I think ETFs sort of grants that to clients. The second thing is the ability to trade, maybe at a different cost in a very volatile market, but there's an ability to still be able to trade compared to other instruments in the market. And I think that makes a very big difference for most investors who either want to capture an opportunity or pour out of a position.
That's great. And I guess the other thing we did see is during the COVID very volatile time in 2020, we saw that the ETFs actually performed very well, and many investors turned to them for liquidity, and they actually performed better than the underlying bonds. So I think we've seen many tests of how well they performed. I just realized that this next question, I kind of asking Arnaud, who's based in France and Paris specifically, to explain what Paris aligned means. And I'm talking about investments and not just being based in Paris. So Arnaud, maybe you can help people who may not be familiar with Paris aligned and what that really means going forward.
Yeah, sure, Debbie. Paris aligned benchmark is probably one of the most significant regulation change in Europe for investments over the last 10 years. I truly agree with what has been said by Andreas regarding investment stewardship, which is important. So the capacity for asset managers to vote and to take an active voting policy, even if we are following indices. However, European Commission, the Europe has decided to go a bit beyond and to oblige asset managers to propose investments that are aligned to the Paris Agreement. So I'm referring to the COP21 in 2015. So as you remember, the objective of the Paris Agreement is to limit global warming to well before 2 degrees and pursue efforts to limit to 1.5 degrees by the end of this century. And Europe has decided to create two benchmarks, climate transition benchmark and Paris aligned benchmark, to basically help investors to support the goals of the Paris Agreement. And I think it's very important. It's very key. Probably we can see in this decision of the European Commission to create benchmarks that the first time that the European Commission is talking about indices as a way to drive investments to combat, to fight against climate change. So that put us at a very high responsibility, meaning proposing to our clients benchmarks and ETFs that are following those objectives. And as you remember, if we don't do nothing, this 1.5 degrees will be reached by the end of 2050. So we are in an emergency, and those two labels, CTB and PAB, is a way to drive gradually but surely investment from classical indices, capital market weighted indices, to climate indices. So for me, that's absolutely key. That's effectively a European stance. It does not exist elsewhere in the US or in Asia yet, but the SEC has recently announced a package of climate regulation. So US will follow, Asia will follow, but Europe is in advance in that field. And at Amundi and Lyxor, we are absolutely convinced that the money, and especially institutional asset managers, institutional investors will continue to drive their investments toward climate indices. That's an obligation, that's compulsory. And for sure, what is nice through ETF, it's available for retail investors very easily, like any other ETF.
That's really helpful description. I think one of the added benefits, and maybe you can talk about this also, is for investors who want to understand what's inside of an ETF, how can they go about doing that? You
mean in terms of transparency, Deborah?
Exactly.
Yeah, but as any ETF, our golden rule is transparency. So you can have easily the composition of any ETF in the industry very easily, and more importantly, you can have transparency on the methodology that is used. If I take the example of the Paris Aligned benchmark, you will find very easily that the methodology consists of reducing the carbon footprint straight away by 50% and reduce gradually year on year by 7% the carbon footprint. That's public information available. So that's a basic rule. Effectively, in the US, a non-transparent ETF vehicle has been created, and I understand it's pretty successful as well, but it is covering another part of the market, and it does not exist yet in Europe.
Thank you. So, Olivier, another term that's out there is net zero. So what does that mean for investors?
Yes, and kudos to Arnaud, because this terminology is not always very easy to apprehend, classify, explain. Sometimes the way we digest it can be quite different. So thanks Arnaud for putting this out. What I'm going to maybe describe with the net zero emissions is a carve out of what Arnaud just mentioned, which is basically the view of a lot of regulators across the European Union, but also in Europe, that a shift is needed to a net zero emission economy. This term is quite complex because it has lots of ramification, but in the financial industry, what it means is that European regulators are aiming to reorient the capital invested towards sustainable activities. I think that's important, and those activities would have to be aligned to the EU goals of a net zero carbon emission by 2050, which is almost tomorrow. What does it mean for investors and ETF users in particular? Plenty of things. The first one is that there's going to be lots of regulations that have been happening that are basically forcing or inviting investors to reshape the way they allocate in their portfolios towards an ESG economy. To Andreas' point earlier, this is exactly where Europe is at the forefront of sustainable investments and ESG compared to any other region in the world. So the focus on ESG in particular is really paramount for European investors, and we are more advanced with more products, more assets, and I would say more regulations than any other markets. There's a few ways as an investor to address this. Both in terms of obligation, but also conviction. There's some investors who want to go beyond the regulation, obviously, and who can allocate more than the minimums required. Maybe I will take a couple of examples where wealth managers and retail type of investors in Europe liked in the past or have tended to like thematic exposures. We're going to go to this, I know, in this session, but clean energy, battery renewal, these are thematics that are actually touching people's lives and that are very concrete in terms of investments. In a more institutionalized way, maybe I'll take an example in the active space that I know pretty well. A lot of institutional investors want to go beyond pure exclusions, pure investments within advocacy or any type of engagement. They want to go the whole 9 yards, I would say, and invest in companies that tend to allocate a lot of their revenues and their resources to a decarbonization world, or to decarbonizing the world. So energy transition frontrunners typically, and this is a way to address those needs. So there's a myriad of opportunities, specifically in volatile markets, where investors can make a difference with not only the regulation, but also, I would say, advocate with their own portfolios what they think is better for the world. Net zero is one of the ways to address this.
That's great. That was a good example. And how do you see active playing a role within ESG? Well,
I think that this is, in my view, this is the perfect couple, the perfect combination, where if you want to make a difference in the ESG space, in my view, going active is certainly one of the best ways. The reason for this is that there's no unified way of looking at the exclusionary frameworks in Europe. There's lots of data, of course. This is a good problem to have, but out of this, we see a lot of, I would say, a lot of exposures that are offered with ETFs that are either only focused on pure exclusions or focused on just a higher revenue generating, I would say, front runners in whatever area you're looking for within the E, the S, or the G. Going active enables you to delegate the best selection with your investment goal, in my view, with combining lots of research available in the market and within the asset manager or the ETF provider you're choosing. Maybe I can give you guys, for a concrete example, we have debated, to use one of your words, Andreas, internally last year about launching a global equity carbon transition ETF. Our approach was very simple: to be aligned with what you've mentioned, Arnaud, to decarbonize the global economy thanks to that ETF by 30%. One of the clear goals that anyone tracking an EU benchmark around climate transition would have to respect and follow. But the way that we wanted to do this was to rather capture the performance of the best positioned companies who were aligned with the transition to a low carbon economy, rather than being based on pure exclusions. We actually believe that accompanying companies that are playing an important role in that change was more important than just evacuating them through some filters, some ESG filters. This is one of the approaches that we've chosen. There's, of course, hundreds of approaches in the market, but going active certainly gives a different benefit.
So maybe we can see if there's any questions from the audience. We've been going now for quite a while, and the panelists have covered a lot of ground, a lot of topics. And so if there are questions, please let us know. Well, they're moving around. Okay, so maybe Andreas, since I haven't called on you recently, do you want to address the first one? Will ESG be the way forward, and will all ETFs contain ESG focus?
In a way, I already answered that question, because I think independent if an ETF is classified as an ESG ETF or not, there are ESG, not ETF, ESG consideration considered with the investment stewardship. And the investment stewardship programs, I think they have changed and will change, that the climate will be more central to these approaches. So we will have with the largest portfolio companies kind of dialogue, and we try to convince them to have climate know-how in the board, for example. We convince them to publish their emissions, right? And we also encourage them and discuss with them what's realistic to commit to certain targets, or to kind of join the net zero initiative. So in a way, yes. When it comes to climate transition and Paris-aligned products, what will be funny to see, if we hopefully, and we have to successfully manage the climate change, those products will become market cap based in 2050. So I think in the very long term, I think all products will be market cap based, is my personal opinion. In the meantime, I'm certainly sure these ESG products will gain market share, will grow. They also, by the way, they are cheaper than the standard products because they are newer, and newer ETFs have lower TR, so that's a good side effect of the ESG products. And also retail investors will invest, so they will grow. But ultimately, I think there will be a consolidation, and hopefully after 2050, climate strategies are not really important. So the focus will probably be more on the S and the G, and there might be some products that focus on those too, but the E should hopefully be resolved if we do everything right and stick to our commitments we all make.
Yeah, and I know, Arno, I noticed that you're at Amundi converting some of your products from market cap to ESG. So maybe you could talk a little bit about that move.
Yes, Debbie. I think basic exclusion, like coal exclusion from indices or controversial weapon that are the basic ESG exclusion, are actually becoming in Europe mainstream. So I do believe that eventually, by law, actually, institutional investors will not be able to invest in an index that does not exclude controversial weapon or coal, because taking the example of coal, that is absolutely impossible to reach the Paris Agreement if we continue to finance fossil energy. So that's our view at Amundi, and that's our goal, is to switch gradually significant part of our range into ESG, and at the minimum to exclude coal and controversial weapon. After that, effectively, you can find several level of ESG intensity, and that's our goal, to propose various intensities. So for clients looking at low tracking error versus the classical index, we may have solutions. I would say broad ESG approach. And for client that wants to take an active stance toward ESG, so a more concentrated approach and a more strict exclusion approach, you will find ETFs that are effectively excluding a lot of shares, a lot of stocks. So you will find various degrees of ESG integration, but basically we do think that basic exclusion will become vanilla in Europe and hopefully in the world. Coming back to the point of Andreas, effectively, you're right, Andreas. If the climate benchmarks are becoming mainstream, eventually they will become the market index. But I can assure you that the challenge in front of us is massive. The world needs 2.5 trillion investments every year in energy systems to reach the Paris Agreement. So there is more than an emergency, and I hope that your belief, Andreas, and your expectation is true.
I think I'm going to go back to Andreas for this next question, because it's one about, are there studies proving that passive funds outperform active? Well, SPIVA, which is an S&P study they do every 6 months, does demonstrate that. But I think Vanguard also does a study that looks at investing in lower cost products, also just tends to deliver better returns. So maybe, Andreas, you can talk to these 2 points.
Yeah, I mean, there are multiple studies that actually prove that the average active fund underperforms the average passive fund. I think that's just a mathematical reality. When it comes to studies from Vanguard, we actually publish high cost versus low cost research, because the main driver of the underperformance is the cost. It's not the active management style. And probably a lot of people don't know, Vanguard is among the top 5 active managers. We have roughly $1.5 trillion in active strategies. We stand for index investing and ETFs, but ultimately we stand for low cost investing. And it's a matter of fact that the average active fund is too expensive for the alpha they create, and therefore they underperform. What I find interesting, new studies came out and addressed the belief of active managers that they can outperform in times of high market volatility. I think the ESMA just published a small press announcement. There was a small research study. There's other research studies. I think I've seen a study from France which showed that active managers failed in the Corona crisis to outperform. So independent of the market situation, it's still a fact that active strategies are on average too expensive, and therefore the share of actively managed fund that underperforms is in the range of 80% in the medium to long term. And so if investors don't have superior selection skills, the index strategy seems to be a very good choice. But if someone has fantastic selection skills or wants to buy an actively managed low-cost fund like we have it at Vanguard, that could be the alternative.
That's great, thank you. And Olivier, there's a question around distribution for ETFs. Do you think that ESG ETFs will cause more adoption by investors, and will that be for retail or institutional investors?
Wow, I get a very broad question, actually. So yes, I see Andrea and Arno laughing. You wish you had that question too, right? I was expecting the crypto ETF question. I would say so. ESG is making for sure inroads in every type of portfolio, every kind of portfolio, for a couple of reasons. Because it's a must for society, but it's also because I believe that our investors, at least the ones we're talking to, do have some convictions to make this world a better place, to use a famous expression, not only just about decarb, but around every aspect of the E, the S, or the G. And this is something that is going to drive, in my view, a lot of ETF adoption, in particular because ETFs will or are already the easiest investment tool for any type of investor. I'm thinking of the retail clients in particular. One thing that Andreas talked about at the beginning of this session, which I find quite interesting, is the retail adoption of ETFs, and in ESG in particular. It's interesting to see that in countries like Germany, which is a major market, France as well, and Italy, over 80% of self-directed investors do not have a financial advisor. Those investors who invest in the stock markets. It means that they make up their own decisions, and ESG is one of the criteria they're choosing. So yes, I would say to that question that I believe that the ETF distribution will heavily rely on ESG-themed ETFs. And one thing we haven't talked about in that session is that ESG is not incompatible with thematic ETFs and is not incompatible with passive or active strategies. And hopefully ETFs will close the gap on this. Yeah,
so I was going to turn to the poll, but I realized if I say go to the poll, we're going to lose these questions. So I think what we will do is we'll talk about the mega trends. We'll go to the poll because that is around trends. And maybe I'll just briefly say that when it comes to crypto, the first crypto products in Europe were in Scandinavia, and then Switzerland announced that they wanted to be the crypto capital of the world, and really has made a lot of inroads in changing regulations to bring about many product launches in Switzerland. We do see other countries embracing crypto, but the UK doesn't allow crypto to be marketed and sold. So we do have diversions in the view by regulators. And in the US, you can only have crypto products that buy futures and not spot. So an evolving place. But I know, Arno, you wanted to talk about themes and megatrends. So the poll is up. So maybe you can address the poll and talk about your thoughts on, do we eventually see some of the themes become sectors, and where are we going?
Yeah, sure, Debbie. So we proposed on that poll 10 thematics, so pretty diverse. So that's interesting to see that new energy is coming first. For 73%. That's actually what we are seeing in the flows. As said, we are seeing year to date I would say conflicting flows between people investing in oil and gas, fossil fuels, and at the same time, clients investing in new energy that are techniques that are required, to face especially the shortage of gas that Europe will face in this crisis. So it's in line with flows. Interesting to see biodiversity number 3. There is that's probably a takeaway for us. There is not so many products in the market available right now on biodiversity. We need to work on it. Cyber number 2, it's effectively the theme is very popular. Cyber will become mainstream. It concerns absolutely all companies in the world now. So this industry will become massive, and we have already significant products in the market on this thematics. The market is pretty crowded. Robotics as well, classic thematics. I'm surprised not to see actually future mobility, electric car, only 15%, pretty low. And pretty disappointed to see gender equality so low. So we need to do something, Debbie. There's a problem here. Gender equality should not be there. So very interesting poll for us to work on.
I agree. So I'm going to give you each an easy question. So what is your outlook for 2022? And if there's something I didn't ask you that you wanted to talk about, and I'll start with you, Olivier, you can mention something if I didn't give you too difficult of a question.
Thanks, Davey. Maybe I'll just, for the audience today, I will just remind everybody that ETFs are a great tool to diversify their portfolio. I do see 3 trends coming up this year, looking at the market volatility and the recent events, combined with the macroeconomics. First and foremost, ESG. We've talked a lot about sustainability. I do believe that there's lots of ETFs available to European investors in general. There's going to be a lot more this year, as this is a key focus for ETF providers. So good news. This is for sure something that is going to be to keep deploying across the markets. The second part is actively managed ETFs. Every time there are volatile markets, there are some discrepancies, but there are also some nice stories to make out of this. So as I would remind the audience, active ETFs help close the gap between active and passive investments with very nice features. It's only 4% of the global AUMs, but 12% of the flows. So something to watch out. And Arnaud just mentioned the trends, I would say thematics in general. This is a key focus area. We go with lots of wealth managers, distributors, and retail investors who are looking for some specific themes that tend to replace sectors sometimes. So some interesting ideas and pick up there as well.
Perfect. And I'm going to turn to you, Andreas. And I have to say, I do think retail must be on your radar, because I'm seeing TV ads for Vanguard on TV here in London. But what are your trends for 2022?
It's very hard for our competitors. They are at home and turn on the TV, and then they see a Vanguard ad. I think, the ETF itself as a trend will continue, right? We will see more growth, and I think in particular in Europe we will see index investing, be it ESG or non-ESG, will grow a lot. We are, I think, at 20% in the US. We are partly above 50% active passive. So I think we will move in that direction. We will see more retail investors joining the capital markets, like saving, leveraging the capital markets, and they will use ETFs at a large scale, which is great. Good saving, more money when they retire. I think ESG will come back hopefully soon, because that means the crisis in the Ukraine gets resolved. I also believe that fixed income ETFs will see a revival when the market situation changes, because I think the benefits of an ETF on the fixed income side are even greater than on the equity side. It's a fantastic instrument, and this shift from passive to active, that still needs to happen in fixed income a lot. And then last but not least, there is no call with Vanguard participating where we don't talk about fees. I think we will see further fee cuts in 2022. 2021 has been an enormous performance year. So the AUM basis has increased. Asset management is a scale business. So there is profit to be given back to the investors. So we will see further fee cuts. So all in all, it looks very good in the ETF industry, very bright for investors as well.
So Arno, you get to share your thoughts for the rest of 2022.
Yes, Debbie. I do agree. Retail will increase in 2022, probably through the development of fintech. I can see that major fintech in Europe that used to start, with payment services are now offering investment products, savings products. That's the natural evolution of fintechs, and they will help ETF, and they will use ETF for sure. Fintech will use ETF because it's easy and it's cheap. So we're gonna see more retail through fintechs. We're gonna see, unfortunately, more investment towards inflation products. Inflation is changing the macro view and is here to stay due to the crisis. So definitely we will see more flows in inflation, and hopefully we will see more flow. We strongly believe in it into net zero investments. As explained by Olivier, how it works. That's for me and for Amundi, and for the whole industry, I guess, the main challenge in front of us. And I do expect that this trend will increase this year.
That's great. You guys have been a terrific panel. You shared a lot of insights with everyone. Everyone gets to look forward to, we are celebrating the 22nd anniversary of ETFs in Europe on April 11th. So we have a party we can have next month. And thank you for your insights. And I will turn it back to our host at the Swiss Exchange.
Bye-bye.
So thank you very much. Thank you, Debbie. Thank you, Arno, Olivier, and Andreas. That was a very insightful discussion about ETFs, the past and the future. And because it was so much information, as said in the beginning, we have recorded it. So we will send out a thank you email to all the registered viewers. And so we can watch the whole of it again, or just part of it, the key points which interested you. So thank you also to the audience that you registered in such big numbers. I hope you enjoyed this webinar and it gave you some really good food for thoughts. Our next BörsenTalk is a Mittag is on June 28th, but foremost, I would like to highlight our flagship BörsenTalk event, which takes place at the end of May, on Tuesday, the 31st of May to be precise. It will be held here at our premises in Zurich at Pfingstweidstraße, with obviously networking opportunities, panels talking about crypto asset, ESG, we heard a lot now, will be also part of it, and additional panels. And obviously I'm especially pleased to welcome Dr. Fritz Zurbrügg from the Swiss National Bank as our keynote speaker. So please reserve the date already today. I'm looking forward to see you all in persona here in Zurich. With that, we close today's webinar. Thank you once again for joining us. Thank you for your time and interest. Join us next time. Have a good day. Have a positive trading day. Enjoy yourself. Thank you.